Ladies and gentlemen, good afternoon. Welcome to Qisda Corporation 2022 second quarter investor conference. This meeting will be co-chaired by Chairman Peter Chen, President Joe Huang, and CFO Jasmine Hong. They are joined by our executives, namely General Manager of Information Technology Business Group, Daniel Xue, GM of Commercial and Industrial Business, Yuqing Lin, GM of Medical Devices Business Group, Harry Yang, GM of Business Solutions Group, Michael Lee, GM of Networking and Communication Business Group, April Huang, and Chief Investment Officer, Michael Wang. The agenda for today is as follows. The meeting will take about an hour. Firstly, Jasmine, our CFO, will go over our second quarter financial results and business highlights. Next, Chairman Peter Chen and President Joe Huang will go over our business updates and outlook. Then, the GMs of business groups will have remarks presenting their respective business summary. Then we'll proceed with questions and answers. You may submit your questions online. We will compile all the questions from the investors and answer them during the Q&A session. Now, before we commence, we would like to remind you to pay attention to the safe harbor notice. All forward-looking statements contain risks and uncertainties. Please also spend some time to read the safe harbor notice on slide number 4. Thank you. Now we would like to hand over to Jasmine Hong, CFO, for the second quarter results and business highlights. Good afternoon, I'm Jasmine, CFO of Qisda Corporation. Firstly, I would like to briefly introduce Qisda Group. Qisda is a global technology group with businesses spanning information technology, medical, smart business solutions, and networking communication solutions. We have 16 listed companies under the umbrella and more than 30,000 employees. We have manufacturing sites, sales offices, and R&D sites around the world. For our revenue breakdown by geography in 2022 first half, Asia represented 42% of the revenue, Americas 33%, Europe 23%, others 2%. First half revenue was 123.7 billion. Last year, we won many Best Employer awards from around the world, including Forbes World's Best Employer and HR Asia Best Companies to Work For and We Care Most Caring Companies Award. Moreover, we also won Sustainability Award, including Taiwan Corporate Sustainability Awards. Under Qisda, we have 4 major business groups, IT, Medical, BSG, and NCG. The purple boxes represent our high-value added businesses. Besides Medical, BSG, NCG, and these business groups, we are also aggressively developing high-value added products under IT. Together, the high-value added businesses accounted for 40% of our revenue in the first half. And each of the business had their revenue reaching 15 to 30 billion in 2021, representing a sizable scale. Under IT, we have displays, projectors, and under the high-value added product line of the IT business, we have professional display module, integration solutions, and high-end video surveillance. Under medical group, we have 2 hospitals, one in Nanjing, the other in Suzhou. We also have equipment and consumables, dialyzer, and medical management consulting services. Under BSG, we have total solutions and AIoT solutions for smart hospital, factory, retail, energy, enterprise, and smart campus. Under NCG, we have LAN, MAN, wireless broadband, digital multimedia, and enterprise mobile solutions. We also have BenQ Materials under the group's umbrella, which is offering advanced battery materials. We also have investees including AUO and Darphone. Moving on to our financial results for Q2. First up, some highlights. Q2 revenue was 60.8 billion, OP income 2.26 billion, each at a 10-year new high and up YOY and QOQ. Revenue went up by 12% YOY, OP income up by 19% YOY and 71% QOQ. OP income posted strong growth, mainly because gross margin and OP income margin increased YOY and QOQ. Gross margin was 14.8%, the highest in a decade, up 1.9 percentage points QOQ. OP income margin was 3.6%, up by 1.4 percentage points QOQ and 0.2 percentage point YOY. OP income went up by 940 million, or 71% QOQ, and 357 million, or 19% YOY. The four business groups posted double-digit revenue growth YOY. IT's revenue went up by 14%, medical up 25%, BSG up 14%, NCG up 10%. Medical's top-line growth was particularly strong. Medical, BSG, NCG all posted bottom-line growth YOY. Medical's gross margin and OP income margin increased YOY and QOQ. OP income more than doubled. BSG's gross margin and OP income margin increased for 2 consecutive quarters as the impact of material shortages lessened. NCG's gross margin and OP income margin both hit record highs and increased for 5 consecutive quarters as the negative impact of material shortages lessened. For our IT business, OP income grew significantly QOQ in Q2 as the result of strong demand for commercial and industrial applications. With a decline in profit narrowing YOY, net income attributable to Qisda reached 0.98 billion, up by 0.45 billion QOQ with an EPS of 0.5 NT dollar. The same period last year had a non-GAAP profit of 2.7 billion due to disposal of asset and investments, and gain from income recognized using the equity method of 0.5 billion. Therefore, net income attributable to Qisda slipped by 2.8 billion YOY in Q2. For the first half highlights, revenue was the highest in 10 years. OP income reached the second highest for the same period in a decade. Net income attributable to Qisda was 1.516 billion with an EPS of 0.77 NT dollar. While at the second highest in 10 years, first half's OP income decreased by nearly 38 million, slightly down by 1% YOY. In the first half, in the face of challenging circumstances such as lockdowns in China, shortages of materials, increasing materials and logistic costs, we managed to post revenue and profit growth in Q2 and were able to maintain OP income at the same level in the first half as 2021 and deliver sequential growth. Net income attributable to Qisda decreased by 4.4 billion YOY, mainly due to a decrease of 4.3 billion in non-GAAP income versus 2021, which was attributable to the disposal of asset and investment contribution and a contribution from income booked under the equity method. Moving on to quarterly comprehensive income. Net sales came in at 62.7 billion. OP income was 2.2 billion. Net income attributable to Qisda 982 million, EPS 0.5 NTD, gross margin 14.8%, OP income margin 3.6%. Revenue went up by 6.8 billion or 12% YOY. OP income up by 357 million or 19% YOY. Net non-GAAP income decreased by 3.1 billion YOY due to the disposal of assets and investments in the same period a year ago and changes to equity method income recognition, resulting in a 2.8 billion drop in net income attributable to Qisda. And revenue increased by 1.9 billion or 3% QOQ. OP income went up by 940 million as gross margin increased from 2.9% in Q1 to 14.8% in Q2, up by 1.9 percentage points. Net income attributable to Qisda went up by 447 million QOQ. EPS went up by 0.23 QOQ. First half comprehensive income. Net sales came in at 123.6 billion, up by 16.8 billion YOY or 16% YOY. OP income was 3.587 billion, down by 38 million YOY. Net income decreased by 4.3 billion, again due to the disposal of asset investments in the first half of 2022. Net income attributable to Qisda was 1.5 billion, down by 4.4 billion YOY. EPS 0.77 NTD. Next slide. Here are our 5-year revenue and OP income trends. Compared with 2018, revenue and OP income increased significantly throughout these 5 years. Single quarter revenue grew from 30 billion in Q2 2018 to more than 60 billion and exceeded 60 billion for 3 consecutive quarters since 2021 Q4. Half-year revenue also increased from 70 billion plus to more than 100 billion, exceeding 100 billion for 2 years in a row since 2020 second half. If you look at revenue, we will know that our 2022 second quarter revenue grew by 24.7 billion or 65% from the second quarter of 2018. First half revenue also grew by 49.9 billion or up by 68% from the first half of 2018. OP income has also been on an upward trend. Q2 revenue grew by 0.93 billion or 70% from the second quarter of 2018. First half revenue grew by 1.4 billion or up by 68% from the first half of 2018. So overall, our revenue and OP income have been on upward trends. Next slide. Balance sheet. Total assets 204.539 billion. Inventory in the end of Q2 was 56.2 billion, down by 147 million QOQ and up by 14.224 billion YOY. This was consistent with the industry trend. In the following quarters, we would work harder to digest assets inventory. The financial assets at fair value through other comprehensive income non-current went down by 3.06 billion. This was a non-cash item representing the changes in the measured assets of Radium and AUO's shareholdings. Key financial ratios. Cash turnover days was 97 days, flattish from a quarter ago, but up by 24 days YOY due to an increase in inventory turnover days. Next slide, revenue breakdown by business. In Q2, high value-added business accounted for 41% of revenue. Under the high value-added business, NCG accounted for 13%, BSG 12%, medical 8%. High value-added of IT was 8%. Next slide. Revenue breakdown by business yearly numbers. Our monitors revenue grew steadily, but as the revenue share decreased to around 40% from about 60%, this represented the results of the persistent increase in high value-added business. Next slide. This is our first half results from our listed companies under the group's umbrella. On the left, our first half numbers. In the middle, first half last year numbers. On the right, YOY differences and changes. Moving from IT, medical, BSG, and NCG, here are the results. For IT, data image revenue went up by 39% YOY. Net income attributable to the parent company went up by 90 million or 78%. EPS increased by 1.3 NTD, reaching a record high. TopView's revenue was up by 19% YOY. Net income was up by 146%. EPS went up by 2.44, registering the highest in the same period. Simula's revenue went up by 89% YOY. With the revenue increasing, net income also increased by 293%. EPS went up by 1.05. Under medical, we have BenQ Medical Tech and Concord Med. BenQ Medical Tech revenue increased by 112% YOY. Net income increased by 1,387%. EPS went up by 2.57, highest in the same period in 7 years. Concord Med, which was a new member in our grand fleet of alliances, posted revenue growth of 24% YOY and net income growth of 123%. EPS also went up by 0.32 NTD, the highest in the same period. DFI, shaking off the impact of the pandemic and component supply shortages, posted revenue growth of 46% YOY. Net income also increased by 55% and EPS went up by 0.61. A-Win's revenue increased by 58%, net income up by 920%, EPS up by 0.98 NTD, the highest in the same period in 6 years. Ace Pillar revenue increased by 7% YOY. Net income affected by lockdowns in China went down by 7 million or down by 8% YOY. Partner revenue increased by 7%, net income went up by 41%, EPS up by 0.23 NTD, the highest in the same period in 20 years. Meta H, formerly known as SciSearch, revenue went up by 2% YOY. Net income decreased by 130 million YOY due to raw material tightness and also disposal of assets. Under NCG, we have Alpha and Hydron, both of which posted strong revenue growth for Q2. Alpha's net income increased by 64%. EPS also hit the highest in the same period in 5 years. Hydron's net income increased by more than 1,000%. EPS growth posted the highest momentum in the same period in 10 years. BenQ Materials revenue increased decreased by 1% YOY. Net income increased by 113 million or 26% YOY. EPS increased by 0.35, the highest in the same period in 8 years. So overall, in the first half, our listed companies under Qisda's umbrella delivered strong performance. Ladies and gentlemen, friends from the media, good afternoon. I am Peter Chen, Chairman of Qisda Corporation. In our Q1 results conference, I mentioned that the first quarter would be the trough of the year for Qisda. For Q1, we reported revenue of 60.9 billion, EPS of 0.27 NTD. And for Q2, as you have heard from us, our revenue was 62.8 billion, EPS was 0.5 NT dollar. For the first half, our revenue reached 123.7 billion, up by 16.8 billion YOY. EPS was 0.77 NT dollar. Q2's EPS was 0.5, up significantly from the 0.27 NT EPS in Q1. So we have achieved what we have promised to deliver, delivering growth for revenue and profit from Q1. Around this time last year, we have shared our concerns for the future. Back then, we pointed to concerns over uneven distribution of components and high inventory levels at channels. We had said that these concerns and these situations may likely become the new normal in the industry. In Q2, lockdowns related to the pandemic had dealt an impact on us, and the impact was bigger than expected. In May and in April, our revenue and profit took a hit. Back then, we also expressed concerns over surging CPI. As you can see that over the past year, CPI rates across many parts of the world are surging. Due to the high CPI trend, countries around the world seek to curb CPI. The Fed, for example, decided to raise interest rates by 0.75 of a percentage point in July, with another 2 to 3/4 of a percentage point hikes expected for September. So our downbeat projections have all become the reality now. With lowering demand, rising prices have suppressed consumers' purchasing power. As we can share with you at the moment, these would be the circumstances that we face in Q3. Demand is weakening and the impact is materializing. Despite the unfavorable conditions in Q2, Qisda managed to deliver revenue and profit growth QOQ, which was quite a feat because we have been able to deliver sequential growth. For the next quarter, I think you may be very curious to know our projection, but I think I can share with you that there will be slower seasonality despite the traditionally high season. If we look back on the past year, today we are seeing that demand is weakening in Q3. Traditionally, the second half would be a stronger seasonality. We enjoy stronger seasonality than the first half, and Q3 is usually the highest season of the entire year, ahead of the year-end holiday season. However, this year around, Q3, which used to be a traditionally high season, is not enjoying higher seasonality. Monitors in particular are seeing slower demand. I think many companies or the entire industry would need to be mentally prepared because their Q3 revenue may likely be lower than Q2 or comparable to Q2 performance. This will be the circumstances confronting many companies and industries. The best case scenario for Q3 in terms of revenue is that our revenue may be on par with Q2 numbers, but very likely they will be below Q2 numbers. But as we have shared with you over the past few quarters, Qisda has been very committed to optimizing our high value-added business. In Q2, especially in Q2, our medical business posted strong growth, both in terms of revenue and profit. It was up by 25%. You may be questioning the momentum, but it was because of the lockdown measures in mainland China, which affected our hospital business. Excluding the hospital business, other business lines under the medical business posted strong growth. Moreover, our NCG delivered strong profit and revenue growth in the first half. Our high value-added business have their product lines complement each other nicely. In Q3, ICT business saw demand lowering, but with the complementary benefits from medical, NCG, and AIoT solutions, we believe that we will still be able to deliver good results in Q3. And we believe that we will be able to outperform the industry. Therefore, despite the slower seasonality in Q3 and the second half, we will leverage the product mix of our business groups to pursue growth continuously. In April, we announced that we decided to dispose of the assets of BenQ HK. Since we have already made the announcement, we would do our best to complete the transaction within the year. Currently, all the progress is taking place nicely, and we are working toward the defined objective. So in terms of operating performance and non-op performance, we believe that we will be able to deliver strong results for this year. Although Q3 will likely see slower seasonality, we will continue to push through to optimize our high value-added business. So this is our view for Q3. As for our outlook for the second half, given the uncertainties for Q4, we would share with you more perspectives in our next quarter's investor conference. Now we will have Joe Huang, President of Qisda, to say a few words. Ladies and gentlemen, good afternoon. I'm Joe Huang. I would like to provide you with some updates on our Q2 and Q3 performance. In Q2, we were affected by lockdown measures in Shanghai. Our BGs suffer varying impact in terms of production activities. Moreover, due to Russia-Ukraine war, our orders from European customers dropped. Thanks to our efforts and our extended presence in Taiwan and Vietnam, we deliver strong revenue growth. Revenue reached 62.8 billion in Q2 and 123.7 billion for the first half, up by 12 to 16% YOY. We also registered double-digit growth in revenue from each of the business group. In Q3, there are macro conditions, macro uncertainties, and the challenges could be quite stringent. And inflation, as well as interest rate hikes, also pose big challenges for us. So our team has to remain committed and remain focused. We will do our best to maintain our growth momentum to deliver results that are better than Q2 or at least on par with Q2. Currently, our IT and NCG production is still below demand and has yet to pick up the pace to deliver products. We will need to address these challenges to improve our revenue. As for gross margin, we will continue to boost the ratios of the contribution from the medical, NCG, and IoT solutions. Under the unfavorable macro conditions, we believe that these efforts will help to benefit our results. In the face of uncertainties from the pandemic and also from the ongoing war, we will need to strengthen our supply chain agility and also the flexibility of our supply chains in Southeast Asia, so that we will be able to ensure availability of our products in the second half. We believe that our presence in Southeast Asia supply chains will increase so that we will be able to ensure improvements of our product availability since Q3. Thank you. Next, we would have Daniel Xue, GM of Information IT Business Group, to say a few words. Good afternoon, I'm Daniel. I would like to say a few words on the IT Business Group. In Q2, with downbeat demand from the monitor business, commercial demand also decelerated. However, we have seen improvements from semiconductor component supplies. We still maintain YOY growth in the monitor business, despite the more conservative demand from our customers. For Q3, we will need to be prudently cautious of how we deal with product availability so as to improve our inventory levels and management. Thank you. Next, we would have the GM from CIG, Yuqin Lin, to say a few words. Good afternoon. I'm Yuqin Lin from CIG. Now about our Q2 performance. Thanks to the strong demand for projectors, commercial, industrial products, and automotive modules, we saw YOY growth in revenue. Despite the lockdowns in China, we have been able to accelerate production in May and June to make up for the deficit. Moreover, we have seen increasing adoption of our automotive wireless modules. Looking ahead at Q3, customer demand remains strong. However, there are still shortages for semiconductor components. We would do our best to secure components and digest the excess orders. Moreover, we will also pay close attention to the impact of inflation and the implementation for customer orders. In addition, we will boost our production efficiency, expand CapEx to deal with customers' changing demand. Thank you, Yuqing. Next, we will have Harry Yang, GM of Medical Business, to also say a few words. Ladies and gentlemen, good afternoon. I'm Harry Yang from the Medical Business Group. I would like to provide you with some updates on our business. Our revenue went up by 25% in Q2. The medical equipment business alone increased by 78%, reaching a historic high in Q2, and also our profit reached a new high for 4 quarters in a row. Mainly thanks to three reasons. First of all, our anti-pandemic products, including ethanol solutions and face masks, have seen their demand higher than our supply. Moreover, our dialysis business performed very strongly. In China, we have achieved registration and certification from BenQ Biotech, and actually we have achieved certification in 9 countries in Southeast Asia. Thirdly, this year, with expansion into the medical management consulting services, we have acquired Concord and Heyao Pharmacy, which allow us to pursue rapid growth. Looking ahead at Q3, we will maintain our Q2 momentum, and we are also expecting to see overseas growth in the post-pandemic era. Thank you. Next, we will have Michael Lee, GM of Business Solutions Group, to also say a few words. Good afternoon, ladies and gentlemen. I am Michael from BSG. In Q2, our 5 major subsidiaries, including DFIA, Wind Partner, ACE, MetaAge, reported consolidated revenue of growth of 14%, up by 21% in the first half. Gross margin for the second quarter was 19%, up by 0.4% YOY and 1% QOQ. We are seeing sequential growth in our gross margin. For the upcoming quarter, we are seeing steady growth in demand for new infrastructure and digital transformation projects. Our order momentum is above our supply capacity, and we believe that demand will continue to grow quarter after quarter. Currently, we are prudently positive about the demand from our customers. Thank you. Next, we will have April, GM of our NCG Group, to say a few words. Ladies and gentlemen, good afternoon. I am April Huang, GM of NCG. In our Q1 investor conference, I had told you that we would be able to return to profitability this year. In Q2, our revenue went up by 10% YOY. In June alone, we registered a new quarterly high profit and revenue. Although our Q1 revenues slid YOY, we still managed to deliver 3% for revenue growth YOY. The growth in Q2 was mainly thanks to the market expansion efforts. Hytron has expanded into new markets in Q2 2022. With very strong performance in North America, which grew by 20% YOY. Hytron also posted strong growth in new markets, including Latin America and Europe, each growing by more than 20% YOY. Also, order fulfillment rate increased from 50 to 60% to 85% in Q2, helping us to improve revenue. For our gross profit, Q2 gross margin was 19.2%, up by 5 quarters in a row. 19.2% is a very good performance in terms of network communication industry. We have this performance because we have strong model mix improvements. However, we will need to scale up to boost EPS and net income continuously. In Q2, amid improving gross margin, EPS reached 0.43 NTD and 0.7 for the first half, both at the highest point in 5 years. For Q3, our priorities are securing components and reaching mass production for new products. If you recall, you will know that the slide in our revenue in 2021 was due to one of our IP camera projects reaching the end of life. And because we haven't been able to deliver mass production for the new product. But the new product has already reached mass production, contributing to our revenue growth in the second half. We believe that in the second half, we would have mass production from several new products, including those 3.1 and Wi-Fi wired products. Therefore, we believe that in Q3 and second half, we will be able to see YOY growth. Thank you, April. Now we will proceed with questions and answers. Peter speaking. We have compiled the questions posted by our investors, and that we will address some of them briefly. Currently, the market conditions have been quite challenging. And the most important thing for us is to have strong risk management and control. Actually, last quarter, we have already touched upon how we manage risks. And on February 28th, 2020, we have reached mass production at our factory in Hanoi, Vietnam. So far, we have been able to reach mass production for 2 years. We hope that starting from the second half this year, we will be able to accelerate our risk control and management pace, shifting some production activities from China to Hanoi. At Qisda, we have been very committed to information security, corporate governance, and operating efficiency of our business groups. So the negative impact has been minimal on Qisda. We believe that we will be able to better sustain the negative impact from the industry. Also about our high value-added business revenue share and profit share. As we said last quarter, we remain committed to bring the high value-added business revenue to be more than half of our revenue this year. This is a goal that we are working toward. For next year, we would work to improve the high value-added business profit to make it more than half our profit. So starting from next year, we would allocate more resources to increase the profits of our partners under the Grand Fleet of Alliances. So you may see more results from us as we accelerate our transformation. It is much more difficult to increase the profit of high value-added business to more than half of our consolidated profit than bring in over half of our revenue. So we will have to work harder going forward. I have said earlier about the progress being made on the disposal of BenQ Hong Kong's assets. We have made announcements publicly, and all the transaction is underway. We hope that we will be able to recognize the non-net profit within this year from the transaction. There are also questions relating to our operating performance. As CFO has shared with you earlier on the results of our grand fleet of alliances. On that slide, relating to the performance of our listed subsidiaries, I think you can see that there has been growth in terms of profit and revenue from most of the companies there, with the exception of only 2 to 3 companies. Most companies have been able to post significant growth, which reflects the results of our grand fleet principle, which is about creating win-win. We are not growing just through inorganic growth. We are focusing on organic growth as well. We are also pursuing vertical integration to accelerate growth. Working on implementing 4 winning strategies, we are identifying new partners to also pursue inorganic growth as well. By allocating resources and creating synergies across the group, we have been able to pursue growth and deliver strong developments. So besides delivering growth for the new businesses, we also hope that the partners under our grand fleet of alliances will be able to improve their competitiveness. So this is what I'm talking about, win-win, because creating win-win is very important. It is essential for our philosophy. Besides pursuing high value-added transformation, we also want to continuously expand our footprint to make our grand fleet of alliances a platform for unsung heroes and unsung champions in Taiwan, so that we can together compete in Asia and also in the world. So this is our strategy for the grand fleet of alliances. Currently, there are many challenges in the industry and in the market. Still, we are able to deliver revenue growth sequentially. For the first half, we have grown by 16.8 billion YOY, and we expect to see growth for the entire year. For non-GAAP performance, we also believe that they will be growth this year. Our hope is to outperform our competitors. Although macro conditions affect all, we can see many problems and challenges materializing. We will continue to strengthen our management so as to counter the impact and the risks and pursue steady growth. Thank you. There's a question relating to our medical business. It's about our strategic deployment and new products on the roadmap. We will have Harry Young from medical businesses to answer this question. Good afternoon, I'm Harry Yang. About our medical business roadmap, currently, under the medical business, we have 4 priorities. First is medical management, including Concord and hospital business. Secondly, medical equipment and consumables. Thirdly, dialysis. Fourthly, smart medicine, which will include precision medicine and predictive medicine. This year, we have made new investments into TCI. We are a major stakeholder of TCI. AI-enabled diagnosis and treatment will be one of our priorities going forward, and this will also be a key focus of our future investments going forward. Thank you. Hi, I'm Peter. I would like to add to what Harry just said. I believe that medical business will definitely be a strong pillar of Taiwan's economic growth going forward. Qisda has built deep and wide presence in the medical business and industry. Of all the ICT players in Taiwan, we are the only one with such deep and extensive presence. Our hospital business is operating quite healthily in mainland China. We also have medical equipment business and products, including products used in surgical operating room. Currently, the performance of these products is very strong. And we're seeing operations growing nicely. We also have dialysis, artificial kidney solution, and dialysis equipment, for which we're seeing strong growth momentum in Greater China and Southeast Asia. In addition, we have portable ultrasound equipment, which will be a key product of our medical business. And we hope that with the portable ultrasound solution, we will be able to innovate how medicine is conducted and how diagnosis is made in the future, so as to help doctors to avoid medical disputes going forward. For example, in the future, in the ambulance, there may be a portable ultrasound in place to accelerate diagnosis. And also there will be one piece of ultrasound equipment in each of the hospital room to shorten the waiting time to have ultrasound scans. So portable ultrasound devices may usher in disruptive innovation to the industry. And we believe that this will likely be a new driver of our revenue growth going forward. Moreover, we are working on oral dentistry services with our intraoral scanner. We can scan inside the mouth of patients and through digitalization, surgical guides may be printed out through 3D printers to improve efficiency. Compared with the analog style of teeth mode in the past, digital dentistry will likely usher in significant changes to dentistry. Our hospital business has been quite strong in mainland China, and we are moving steadily toward delivering on our promises. Besides the 2 existing hospitals in Suzhou and Nanjing, last year we made new partnership and invested in a new hospital in Guigang, Guangxi province. And that hospital has been in operation since the beginning of this year. The goal is for that new hospital to also achieve 3A rating in China. Why did we invest in Guangxi? Because that province is just adjacent to Vietnam. We hope that for the hospital business, we'll be able to build a top quality hospital spanning across Greater China region and Southeast Asia. When we build that cross-border, cross-nation medical service platform, we may very likely create the most valuable business of the group. So that will be the goal that we work toward. In the interest of time, as we are reaching 3 o'clock, we will share with you more details in the next quarter's investor conference. I will end my remarks here. We don't have any other questions online. This concludes our investor conference this quarter. Thank you all for participating in Qisda Corporation's 2022 second quarter results conference. We will submit the audio and video files online. You may all disconnect now. Thank you.